Joining me now in studio is Jordan Toy from Legacy Family Wealth with his analysis of the current midday trading activity. Jordan, thanks so much for joining us in studio this afternoon. So we spoke just before the show and I was saying to you that European markets are in the green. When I read the boards, they're in the red. So trade really choppy today. But I think sentiment seems to just generally have improved. And this despite some downbeat data we got overnight with U.S. consumer confidence declining in March, this for a fourth consecutive month. This should be concerning, but it doesn't seem like markets really reacting to that.
Yes, certainly. So I think from our perspective, we've seen largely the news has dominated, or the talk of tariffs out of the US has dominated news for quite some time. We've obviously got a big announcement coming out of the US on 2nd of April. Mm-hmm. And, from our take on it is that the last few weeks, or the last week at least, we've seen sort of expectations around how severe those tariffs might be on April 2nd toning down somewhat. But just lots of volatility in markets in the shorter term based on tariff movements. In terms of sorry, what was your previous, the second part of your question?
It was around consumer confidence
Yes.
And how markets don't seem to be reacting to that print as much. I don't know, is it because it's around sentiment and not actual hard figures?
Yes, certainly. So we often look at, you've got hard and soft data, right? So consumer confidence is naturally soft data. It's a case of looking at what people are saying or feeling and what they're actually doing. So we're not yet seeing massive movements in the hard data, things like company earnings, the labor market, etc., GDP growth. So if we start seeing the hard data starting to deteriorate as well, I think you will see quite a bit more volatility in markets. But for the time being, largely our view is that the soft data is sort of being set aside, and we're waiting for confirming evidence. But it is concerning to see that consumer confidence does appear to be deteriorating, as naturally that can start to feed into those harder data points.
And let's move over across the Atlantic now. A big day for the UK government. All eyes are on Finance Minister Rachel Reeves as she prepares to update lawmakers on spending plans, tax plans, and also some relief coming through just ahead of her address, as we got inflation figures out of the UK cooling to 2.8% last month. Jordan, is this something you're keeping an eye on, and how much of a market moving factor is Rachel Reeves' statement?
Certainly. So I think the expectation largely is that this is going to be a somewhat, what is the word I'm looking for, maybe downbeat statement. I think there's not a lot of green shoots that she can focus on, so it's not going to be an easy conversation for her a little later today. The inflation print is somewhat of a relief, but I do think in a large way it's a bit of a red herring, in the sense of there's sort of administered price increases we expect to come through in the UK. We've got utilities increasing, etc. So we've even heard that commentary out of the Bank of England, right, that they expect inflation to tick up somewhat later on in this year. So a bit of a difficult one. On its own, it appears to be a somewhat better inflation print, but in the grander scheme of things, it's hard to sort of call that the inflation battle is won. Definitely far from it. And we saw that out of the Bank of England last week, right? They're sitting tight, they're not moving. They've got all the uncertainty of the tariffs, etc., to deal with. So you're in this tricky position in the UK where growth is quite low, and you have concerns that inflation is potentially going to move a bit to the upside. So I don't envy her. I don't think it's going to be an easy conversation later today, but obviously not a bad thing on its own to see that inflation print slightly on the lower end, slightly behind expectations.
And I guess, a lot of central banks, policymakers finding themselves in really tough positions. We heard from the SARB as well last week. You are dealing with, low growth, inflation coming in lower, but not doing enough to, make policymakers cut rates, considering the global picture as well, right?
Certainly. So, you've got interest rate decisions have an effect on the economy with an immense lag. So, ordinarily the job of a central banker is extremely difficult. You're dealing with a lot of uncertainty and these massive delays. And I feel like now more so than ever, the route ahead for them is extremely, the road ahead is very foggy, if we can call it like that. It's not an easy environment at the best of times to make these decisions. And when you have all this uncertainty out of the US from the tariff perspective, it becomes extremely difficult for central bankers to make these moves. And I think that's largely why you're seeing them sit tight and say, look, we need to see what incoming data looks like, what do tariffs actually end up being, and just more broadly, from my perspective, I think markets don't really know where we're going with this. We don't know what the end goal is. Tariffs are on, then they're off, then they're on again. So the market largely, I think, if there was a better understanding of what is the objective here, what's the end goal, that we might have a little bit less volatility. But that's politics, I suppose.
Volatility really remaining the name of the game on that front. Let's move over to some company news. China's BYD has big expansion plans, Jordan. The EV giant plans to double its sales outside of the country to over 800,000 cars this year. These plans also come after it delivered stellar results, fourth quarter results, and surpassing Tesla's revenue as well. It seems like, BYD is positioning itself as a market leader in that EV market, despite these tariffs that we are seeing.
Certainly. So BYD, interestingly, it's expanded at a very rapid rate, right? You're even starting to see some of them on our roads. Partly, the expansion, I think, is also a response to they know the risks of continuing to manufacture all of their vehicles out of China, so it makes sense for them to move to places like the EU and have these manufacturing plants in other countries. Obviously, it expands their base as well. We've seen, they hit a milestone with these results, like obviously a big jump in revenues, I think up 29% year on year, just eclipsing Tesla's revenues in dollar terms. One important point I kind of note when I look at these results or any results out of BYD is they're talking about new energy vehicles. So it's not purely electric vehicles. Obviously, they make a mixture of hybrids and stuff. So I think in the past, Tesla was sort of a bit bashed in the media around not being overtaken by them, but they're obviously producing purely electric vehicles where there's a bit more of a mixture out of BYD. I'm not saying one is better than the other, but I think that's a key point to bear in mind, that they're not competing sort of like in every space. But rapid growth out of BYD. It's been quite interesting to see over the years how quickly China's manufacturing has gone from sort of, for lack of a better term, slightly less sophisticated sort of products to rapidly turning into pretty well-built cars and quite sophisticated manufacturing. And we're seeing that push from the very top in China all the way down to the bottom. So I think largely expected.
So let's just hit pause on that conversation. Before we get to your stock pick, let's reflect on some counters that have found favor with your industry peers.
My stock pick is a US-listed holding company called Deckers Outdoor. Now, they don't do decking. They don't do anything outdoor. They manufacture, distribute, and sell shoes.
Okay.
And it's mostly two brands, and that's Hoka shoes that are running and active shoes, and UGG boots. Now, a lot of people have their views about UGG boots. They think
like
ugly.
Uggs.
Yes,
Go on.
yes, Uggs, or the Australians say Uggs.
Okay.
Because and the British also, because it's like ugly, it's Ugg. So so UGG boots, whichever way you pronounce it. Sheepskin boots, very comfortable. Apparently you should not wear it without socks. With socks, because then it doesn't go around your toes and make it very soft, but it can get smelly if you don't wear socks.
Yeah, of course.
So there's two ways to wear your UGG boots. And then Hoka is the shoe with the big sole. So apparently it's very comfortable to walk and run on Hoka shoes. And people are buying their UGG boots, they're buying their Hoka shoes. They want to stand and be comfortable. And that's why the shares have been doing well. But in the last 3 to 4 months, it has come down a lot. Some of the air has come out of the excitement of the potentially bubble-like valuation. So much more reasonably priced, while the outlook is still for strong growth, especially outside of the US. So they've already got significant market share in the US, but the growth opportunities outside of the US. So yes, instead of buying a pair of UGG boots or Hoka shoes, rather go for Deckers Outdoor shares, and you can buy some shoes from the dividends you can get from the share.
So my pick is one of the biggest cybersecurity companies in the world, Palo Alto Networks. And if you think about this data-rich world that we're living in, if you think about the explosion of AI and the tools it's putting into the hands of criminal actors around cybersecurity, I think it's a non-negotiable for pretty much every single business and every individual. These guys are really at the cutting edge in terms of cloud, in terms of AI security, firewalls, you name it. So for me, I think if you're taking a 3, 5, 7-year view, this is one of those companies, or at least a sector, you definitely want to have in your portfolio. Yeah. So it's a great business. It's a little bit pricey, but it's all relative, I think, to the longer term growth potential that it has. So Palo Alto Networks is my pick.
So we have, you know, a bet on cybersecurity with Palo Alto Networks, and JP saying don't buy Uggs, but buy Deckers Outdoor. Just your analysis on those counters, Jordan.
Yeah, so I'm myself not so sure of the pronunciation, but obviously those two brands make up a big chunk of Deckers Outdoors revenue. It's a stock that I watch from a distance, not necessarily one I have a deep dive on. But 2 points that I'd note there is obviously the share price has been hurt quite badly since Trump was inaugurated. They have quite a big part of their manufacturing out of China. They have diversified outside of that into places like Vietnam. So that's just one risk to the business there. The other thing is we touched on consumer sentiment earlier. So that will be one to keep a close eye on in the sense of, do we start to see, I mean, you can imagine when the consumer's sort of balance sheet starts becoming under pressure, do you spend as much on things like shoes? So something to keep an eye on, but it's had that share price has had a very strong run. Palo Alto Networks, great company, great sort of great space to be in. It's a sector that I love as well, so I wholeheartedly agree with your guest. I think as a long-term investment, something in the cybersecurity space certainly makes sense. We know how much more data is a part of everybody's daily lives, so the security around that data becomes absolutely vital going forward. I have a slight preference for CrowdStrike in that space. Obviously very similar companies. Palo Alto is a lot bigger and has been going for somewhat longer. Whereas CrowdStrike slightly newer, slightly smaller, but faster growth. So I think both great companies and broadly speaking, a great sector to be invested in.
So you are positive on both counters, but there's something you like just a bit more. What's your stock pick?
So today I wanted to talk about Eli Lilly. I think it's one I've spoken about with you before, but just also we talk about sectors and ones that we think are longer term themes to sort of have exposure to. You know, we know sort of demographic-wise, a lot of the developing world, the age profile is increasing, right? Japan is a clear example. China's following rapidly behind. So if we look at and assume that, you know, populations or the average age on Earth continues to sort of rise over the coming decades, I think healthcare is a space that you'd want to be invested in. Regardless of that, I think it's an essential service, right? Healthcare, pharmaceuticals is something that's not going away anytime soon, and I think Eli Lilly is one of the front runners in that space, right? That's before we even start talking about the obesity and diabetes medication, which has obviously been very topical recently. So I think that's definitely a growth area for the business. They are working on, obviously, those two products that they have in that space are injections, which is not ideal, right? Most people want something a bit easier if they're looking to lose weight. So I know Eli Lilly has something in the works in terms of a pill. We'll see. There's a lot of processes in the pharmaceutical space that have to go right for that to come to market. But just a great company all in all. That's only one part of the business, but I think a really solid company, and I think a sector that has some quite strong tailwinds.
So Eli Lilly wanted to look out for. Jordan, thanks so much for your time and just sharing analysis of a trade at midday. That was Jordan Toy from Legacy Family Wealth.